All right. Good morning, everyone. Welcome to March 19th. One more Tradingology trading room brought to you by Dave and Dan. How we doing, Dave?
Good morning.
Hey, there he comes. Good morning, sir. How you doing?
Good. Just had to grab a cup of water here.
No problem. Get my volume up.
Morning, Stephen.
There we go. All right. Oh, yeah. Another wild day. I couldn't believe I started looking at the deals. 8 straight days of 4-digit moves.
Isn't it insane? It is absolutely insane.
Just epic. Good morning, Andre. I'll watch, make sure I'm not missing anybody else coming in. There we go. All right. How are you guys doing? Any trades this morning or this week? We haven't talked in a week, so.
Yeah, I took a chance this morning. Actually, last night I went long. The market was up 500 points. It was down 300 when I got in. It went up 500. I got out. Got in again this morning when it was down 250, and we're down 385. So I'm a little bit underwater right now, but I think we're going to close positive today.
It's crying here.
Oh yeah, look at that. It's coming back a little bit. So I think we're going positive today.
Yeah, it's one of those odd ones. I actually had I just got some notes from one of the private clients who's trading one of the new systems I'm doing that I'm going to do the recordings on soon around the levels here, and he actually traded both sides. And I'll show you these quick. Andre, looks like you're coming in twice. So shorten it right after the open. He had sent me a couple. See if I can make this big so you guys can see it. He's trading the micros as too. I believe he's on paper still. At least he better be while he's doing this new system. But yeah, this was actually this morning before the open. So 6:30 in the morning, he was in short on the MES and grabbed some nice profits.
Nice.
10 points, another point, another 5 more points. And then so I checked with him. I said, hey, do you mind if I use those? He's like, sure. Here's another one I just did too if you want to use that one too. So he sent me this one. He got it in on the both side. He got long when it went to the upside right here after the open.
Oh, that's a nice one, yeah.
And he hit it for another. So this is perfect. I love how it's working out for other people too. So
absolutely.
Look forward to I'm going to be adding to the member site for that one, guys. I can't tell you exactly which day yet because I got to record them, but we're going to document everything that he's doing and that we're doing there.
And now what is he using for indicators?
He's just using some of the levels that we set pre-morning, and once we passed it, he's also using, he's recently got his hands on the Renko clouds and the SM price signals, so when everything lines up, those are the best trades, and that's how he executed both of them this morning.
Beautiful, beautiful. Now he, do you still have that sale on for the elite membership and the whole deal?
We do actually. I think it's going to go through Saturday.
Okay, so yeah, if anybody wants to get in, maybe when this gets posted, put it into the YouTube description so people can grab that. I'm going to promote this out on Twitter too, just to make sure everybody has an opportunity to get those, because you probably never see them that cheap again. And right. The emphasis here is on protecting your account, trying to get the very best tools to navigate this volatile market. And by far, these tools are the very, very best. So I want everybody to be able to have advantage and take advantage of that. And there was somebody who contacted me the other day. He said, is this a good time for a newbie to get into the market? I said, no. Even veterans are having a tough time navigating this volatility, but it's a great time to practice. Right. Oh, yeah. If you use a paper trading account, you'll learn a lot.
The only bad part about this time, too, is if people are successful, they think it's like this all the time.
Oh, yeah.
It's like, no, it's not like this all the time. This is a trader's dream right now for people that have experience that know how to navigate these.
Yeah, absolutely. You got a little experience. This is like a dream come true almost. I mean, we've been waiting for this for years.
Right. I'll be curious to see how long it lasts. How can they make the, but, you were mentioning last week the videos with the guy that does the gold silver. I forget his name.
Mike Maloney.
Wow.
Good stuff, right?
It's amazing. It's like he filmed that 4 years ago and everything's happening.
Absolutely. I listened to an interview he did this morning that was 6 years ago, and he's been spot on. Just absolutely incredible how he's played this. But he has a really good vision. And I like the vision he has because he knows that since 1971, since Nixon took us off the gold standard, there's nothing backing the US dollar. It can free float, it can inflate, it can do everything it wants. And so you don't really have money anymore working in the economy. You have currency, but there's a big difference between money and currency, which, I mean, I understood pretty well before I listened to his videos, but he really drove it home and he really did a great job with those.
Right. The only part that I was kind of leery about, excuse me, was getting towards the end, and he's talking about, and he even called it out in 2016, was blockchain and stuff. And he's definitely more on the gold and silver. And he's,
oh no, he's changed now.
See, I haven't seen the new stuff since then, so I have to get his.
Yes, since the new ones, he's very interested in blockchain because he sees it as another form of commodity that is not, that even though it's not backed by gold or silver, it does have a utility and it's a commodity. And so he's changed his tune on that.
Nice. Okay. Yeah. Like I said, the last one I saw was that one you were referencing last week, and that was just 2016. Hey, welcome, Josh. Is that my good buddy Josh, or is that a different Josh? Let me see.
Hi, good morning. Yeah, Josh, good morning. Yeah, so we're only down, down 280. It's like a rally, you know. It's like, and the Nasdaq is up, of course. How has the Nasdaq gone unscathed in this? Everything's scathed, but relatively speaking to the Dow.
Yeah, just less, right?
Yeah, just much less of a decline.
Which leads to the ridiculousness and the arbitrage of the YMNQ, which is why I'm not even trading this anymore currently. Clearly, it's not unless you want to do it, you know, if you stay on one side, you're probably okay. But it's one of those where we could hit it and just reverse. So I'm not currently trading VA, but I'm definitely keeping an eye on what it's doing because it's just ridiculous in this straight down motion.
It is unbelievable. It is. The Dow is dropping faster than the Nasdaq. And so what we have is a kind of almost an equalization of the price of the Nasdaq and the Dow, indicating that, when you think about it, though, it makes sense because the Dow is 30 international industrial stocks. I mean, they're really international companies. They're not just U.S. based. And so they're getting killed pretty hard in Europe and in Asia. It kind of makes sense at this point. And the RTY looks like the strongest of the groups today, up 1.2%.
Yeah, it's NQ and RTY are positive. The ES and OM are still negative.
Yeah, see, so that kind of goes, I guess, along with the narrative that S&P 500, you're talking about international exposure. Dow has international exposure. Smaller companies, I think smaller companies are really going to get hit hard, though, especially those without the cash flow. Yeah, they're in some reserves. They get really, really bad.
Hey,
Stephen?
Josh, I was just going to say, Josh, I appreciate you sharing. I did already cover your trade, so fantastic work this morning.
Yeah, good job, Josh. Absolutely.
And Steven's got a question around the 27 being lower than the 21 day. I haven't done any recent ones. Maybe I should just go and download quick. This is the one through the 16th, I think it was. Yeah.
Yeah. So it just means that the 27 day, so the 27 day is just about a month because there's 25 trading days, give or take, in a trading month. So you can think of that as the kind of the month to month, 30-day sum of all of the price changes. And so unless it's really dramatic, and I did the update last night, let me just take a quick look at it to make sure that it's not, if it's like 500-600 points, yeah, it's dramatic. If it's not, if it's only a couple hundred points, it's not that big of a deal. So there's no significance there. But the 21 day is going to reflect some of the big up days that we had. Yeah, 9,000, usually around 2 to 3,000. Boy, we get a big bounce.
Wow.
So like the 21 day is going to reflect some of those 1,000-point days that we've had, the 2,000-point day we had last week.
Those are crazy.
Yeah. And so now, the difference between the 21 and 27-day sum as of yesterday's close is only 140 points. So it's not really that much. They're very, very close together at this point. And typically, but when there's a big difference between the two of them, that's when you start to see one catch up with the other. And the only way you can figure out that is by taking a look at the MT volatility and the price anomaly. If you go through the price anomaly, look at the price anomaly column over the last week or so. No, you got to go. I put it over closer to the MT volatility. Every time it was over 1,000, that's almost exactly what happened the very next day. It would bounce 1,000 up. So when that got stretched, that indicated that we were going to get a bounce at those 1,000-point drops. Every single time it went over 1,000, that means that, we're going to get a bounce on the other side. That's the significance of the PA. The 21-20-day sub, 28 sum is just like, hey, we are extended to the point of once it traditionally right around 2 to 3,000. That's when, over the last 10 years, that's when it bounced. The fact that we dropped under that was a real red flag. And that's the one that he kind of say, hey, look, we're probably going to 10,000 next. This is
right. Well,
so when there's a big difference, Stephen, look for a move where they kind of come back together. Yeah. So if one is really out of whack, the 21-day sum is only, let's say, 4,000, and the 27-day sum is 5,500. If there's a 1,500-point difference in the two of them, you're probably looking for a little bit of a decline further so that it catches up with the 27-day. But the important thing is to take a look at all of the columns, the most important being, excuse me, the MT volatility. Where are we? That kind of tells you where we are in the market. We want to see anything over 100%. There's more sellers than buyers, period. No question about it. Anything over 100%, more sellers than buyers. And so you have to know what environment you're in first. And then you take a look at the flow. You say, okay, hey, you know what? We actually hit a low on the flow of 443% going back a couple weeks ago. And now we've seen, actually, the low that we hit yesterday was only, what was that? It's only 207%. Yeah. So actually is a little bit of an improvement there, which indicates to me that we may get a rally today. So we'll see.
Orphan bulls.
Orphan bulls. That's right. Those orphan bulls are they stand right out. See, this is why the balance of power is so important. You take a look, if you got mostly bearish herding, that's key. And you got mostly bullish herding, for the most part, you're just going to rise. So that's the visualization of bullish and bearish herding is just critical, absolutely critical. So in addition to MT volatility, you want to know what level you're at. Anything over 100% is bearish. Then you have to have confirmation from bullish and bearish herding. All the other ones can kind of support that view that you have of the market. Those are the two most important: MT volatility, bullish and bearish herding. Everything else then you kind of take a look and say, okay, what else confirms that we might continue to go lower, or we might get a bounce? Price anomaly has called it. Every time it's over 1,000, we got to bounce back in the other direction. So,
and these spreadsheets, if you guys don't know, or anybody that's new, or anyone that's newly listening, these are part of the complete market timer system, which is part of the elite membership that is on 90% discount sale right now. As Dave said earlier, if you didn't catch it, or anybody that's joined since then, or anybody that's catching the recording. So just go to tradingology.com/MTS for market timer system. If you just need the scripts, if you need the full elite membership, shoot me an email at support@tradingology.com, and I will get you hooked up with what you need. But this is part of the whole system.
Yeah, absolutely. So here we go. Yeah, we're going. Where are we now? Up 100, right? Unbelievable.
Everybody's positive now. Look at that. We talked for 5 minutes, and the markets get happy.
Yeah.
Just crossed into the positive.
Oh yeah, just one contract on the MYM and MNQ. I'm up $1,000, which is nice.
That's pretty amazing on a micro.
Yeah. So,
that's why you have to be careful in this volatility, guys. That's why Dave's trading micros.
Yes.
Is, that's full contracts. Yeah, it's obviously a $10,000, a 10x gain, but you have the same risk. And we've seen it whipsaw. If you haven't been watching for 2 weeks, 1,000 points is now nothing.
See, I can get into a long MYM and sleep at night.
Right.
I'm not gonna worry about it. I'm not gonna get up. Well, I mean, I still got up at 5 o'clock this morning, but that was just because I'm getting old. Maybe I can't sleep as long anymore. But and also I'm on the carnivore diet, which is giving me a tremendous amount of energy all of a sudden, and I can't sleep in anymore. But it's useful because I get to get up and check the market. And 5:30 this morning, I got into that long MYM. So, that's kind of helpful too. I can sleep. I can go about my day. When I see a profit, I just take it. And that's what I suggest for everybody is you get in, see a good profit, something that you can live with, just take it because you never know. Look, last night we were up 500 points after the EU announced that stimulus package, right? The ECB.
Yep.
750 billion.
Yep.
And then a couple hours later, we were down 884 points, I saw.
Lock up profits when you got them. Absolutely.
So I got out of that long when it was up about 400 or 500 points. And then I waited out all night and got it back in this morning on the long side. Breaking news, CNBC, Dow turns positive.
Well, yeah, yesterday, I should say, was the first time that we had in the email that we closed below 20,000. So that was a banner day.
Unbelievable.
And we were actually in the 18,000s during the trading day.
Yeah.
Before that.
When was that the last time we were in the under 20,000?
Oh, wow.
It had to be back before Trump was president, wasn't it?
Yeah, I think it was 2016, actually.
Yeah.
Let me go to a weekly here. Make it easier on me.
Yeah, that was quite a while ago.
Stephen wants to know which indicators you're using to determine the market bottom.
Typically, what I'm going to be using is as far as a market bottom goes, the MT oscillator is probably the best one on a daily. You want to see that starting to rise, kind of like what we're seeing right now. Just making a little bit higher highs and higher lows. The other thing I'm looking at. I had to restart my computer because Mac OS updated. I got my iPad tablet, but I can't look at it on there.
We'll get this guy dialed in here since we need such big long term.
Yeah. And the other thing is that you really want to take a look at the, empty volatility at 198% means that once it crosses 100, there's more sellers than buyers. When it hits 198%, that means there's twice as many. No, there's like twice as, no, more than that. Because if you think about empty volatility at 50%, which is like the lowest end of the spectrum on empty volatility, that means there's like no sellers left. And when you get to 200%, that means there's no buyers left. And so when everybody's on everybody's on one side of the trade, 98% of them are on one side of the trade, it's time to start looking on the other side. So it doesn't mean that we're actually going to have an extended rally, but at least in the short term, we could end up with a nice gain today. I do believe, though, that there is going to be a fairly substantial rally back up to around 25,000. That would be a 50% retracement of approximately what we've done so far. So I'm kind of watching for that. Plus, Dan has this cross right here on the.
Look at the support it had.
Look at that cross. I love crosses on support lines because they tend to work out very, very well. You had 2 support lines there, and they crossed. And that was actually where it crossed was the exact period of which it declined.
Yep.
The decline started.
That's the one thing that we were looking at too. I don't have it. I had the picture that I sent in the email. Is I love these, the oscillator, and where's my other one I got? The oscillator just puts together, when we had the cross here, look at when this crossed.
Yeah.
When this broke down. So we had the crossover event a month before the drop. So this was the warning signal. And yeah, like you're saying, if you look at this on the weekly chart, look at the last time. So we're looking at weeklies here, and then we'll go like where I established this trend line with this low point at 21,730-ish, whatever that is there. That's when MT, the oscillator, was at the very bottom. So once that starts turning up, this could very possibly be, an indicator of this might be the bottom. Not guaranteed, but we have to see the little turn up right here. We'll see where this week ends. Obviously, we only got a day and a half left, but that could be a signal. And I would say I probably would wait until we get the cross back for the all clear. You're never try and peg the bottom or the top. It's just not going to happen. Be realistic with yourself, right?
Yeah, you just want to try to kind of look. You don't want to pick the top or bottom. That's kind of that's a very dangerous game.
So if we look where it crossed over to the positive side, if you got in long here in February of 19, you had a nice run there until it crossed again. You could have, here's a warning sign that happened before these drops. So if you wrote it to there, that's a good couple of weeks. So I would say wait until these come back, because these are massive separation right now. But these are, the stronger the time frame, the more powerful it is. So you're looking at a weekly chart, you've got a lot of data that's going into those indicators.
Absolutely. That's a good way to look at it. Yep.
And then same thing on the synth. I mean, look at how far we got to scroll this thing, because this is such a major move. And we were talking offline. I haven't done the math yet, but I believe this is even sharper decline than 1929, isn't it, Dave?
I think it is. I think it's it seems to be, but on a percentage basis, I think it's pretty close.
And if you guys compare this, so again, we're looking at weekly charts. So 1, 2, 3, 4 weeks. So 1 month, this is basically taken. Compare that to the last major one in 08 and 09.
All right, let's take a look at this. So if we had, so we're down approximately from the high from let's call it 30,000 to 20,000. That's 10,000 points. That's a 30% decline, right?
Yep.
We were like 425 on the Dow back in 1929. And it dropped in the first wave to just below 200, I think 190. That would be over a 50% drop. So we're not quite there yet.
We're definitely at the velocity if it continues, though.
Well, if we go see, the next area of support is until 15,000 there at that other bottom, right?
Yep.
So that would be 50%.
Sure. Okay.
30,000 to 15,000.
So now here, I'll make this bigger so you guys can see it. I'll maximize the screen here. So now I switched it over to a monthly chart, just so I can get 20 years of data to compare this back to 08, 09. So here's 1-2 months. Obviously March, we're still creating it. We're 19 days in. It's flying by fast, but it's not finished yet. So we could finish down, or this could just have a longer wick on it. If we scale this in to compare 2008, 2009, this took all of 2000, it took over a year And everybody talks about the last financial crisis, right? Of the housing market and all that. Well, look at how long that was. That was a controlled downslide bear market compared to what we're in right now.
Yeah. Yeah.
That brings it into perspective right there.
Yeah. And if you put it on a log chart, it might even, it won't show that big decline, but on a percentage basis, I wonder, it would be kind of interesting, but the percentage decline was 50% from 2007 to 2009, but it took, like you said, over a year. We're down 30%. If we go to 15,000, we'll be down 50% in a very, very short period of time.
And that's where there'll be serious blood in the streets. You think people are crying now? Imagine if we hit 15.
Yeah, exactly. I don't think you can do a log chart on that one. You'd have to go to the charts on the main tab there.
Oh, gotcha. I can't do it on the flexible.
Yeah, I don't think you can. No.
Okay, we'll leave it then.
Yeah, that's fine. But you have we could end up seeing 15,000, which is another, almost 5,000 point drop here.
Well, people thought we were ridiculous saying 20 to 22,000 as support or where we could go, and now look at us.
Yeah. Yeah, this raises all kinds of different questions, about what's going to come after this, because I think, let's say we hit 15,000, we do a 50% retracement, that'll bring us back up to 22.5 or so, just actually right underneath that 2018 low. So you got a drawing tool there. Let's do a drawing tool. And kind of sketch that out a little bit.
2018 low?
Yeah, the 2018 low right there would probably be, that was previously support. Those turned into resistance. And so at that point, we would be looking at, about 22,000. If we drop down to 15, that would be the logical retracement area. And at that point, everybody's going to say, oh, we're out of the woods. Everything's good, guys. Yeah, right. I don't think so.
Yeah, you could bounce off to that. And
I don't see any bottom to this thing. I honestly think that if we are playing by the 1929, 1932 playbook, if we hit 15,000, we do that bounce higher, 50% retracement, which is almost identical to the 1929, 1932 chart. After we hit a 50% decline, we went to about 50% retracement. After that, we took out that low at 15,000 and we declined. I think it was close to like 80, 90%.
Mm-hmm.
So an 80%, let's call it 85% decline from 30,000 is what? 24.5. You're talking about a 5,000 point Dow.
I'd have to extend this one back. Oh, this would probably be support then.
It might be. I wouldn't be surprised. That would be taken out. When that's taken out, panic. That would be the panic. I don't think people are panicking right now. I think I've heard Ackman, what's his name?
Yep, I know who you're talking. Yeah, I think it's Ackman.
Ackman was on CNBC this morning. He sounded shaken up, actually, by this thing. Ray Dalio was on CNBC, had a great interview. He was actually really, really good. He didn't see it coming. He said he knew it was coming, but he said the timing of it was just in the quickness in which it declined, took them off guard. And he said they're down 10, 20%. I think he's lying. I think it's probably more than that. He's probably down more than that, because when he hesitated he hesitated a lot when he was talking about it. He goes, oh, we're down 10, 20, around 20. He kept saying that. And I said, nah, yeah.
Yeah, that's in each account. And then you added them all up.
Right. You add them all up. Yeah. So on the long term, Stephen, I think we're looking at a very, very long-term decline. The great news is if you guys are trading, if you guys understand what's coming, even if this never happens, but I do believe there's absolutely no doubt in my mind that this is probably going to happen. We're going to be in this deflationary period, probably for a year to 2 years. We'll see stocks decline. Once stocks get down to maybe 15,000, maybe 10,000, interest rates are going to start rising. People are going to start feeling hopeful, and interest rates will kill the stock market for the second leg down or the last leg down, because now with interest rates rising, people can't buy houses anymore. And I mean, with low rates, yeah, everybody can buy a house, right? As long as they got income. But there's so much stimulus being pushed into the market right now that we're going to enter, I believe, a period of hyperinflation after this deflationary period ends. There's going to be massive buying opportunities in stocks, especially dividend-paying stocks at the bottom. It's going to be crazy. You're going to get, in 1929, I saw this recently. Mike Maloney, in fact, had a video on this. I think it was his latest video. He showed that the dividend rates in 1929, after the crash, went to 14% on most stocks.
Wow.
I mean, you're getting paid 14% plus you're getting capital appreciation on those stocks. It's going to be a massive buying opportunity.
Exactly what Steven's talking about there. Yeah. So get your shopping list ready, guys, if you don't already.
Absolutely. This is not the time to buy long term yet. I mean, you can nibble here and there, but we got a lot more to go.
Yeah, don't throw your full positions in. As you said, the key word right there was nibble. Just take a little bit, because nobody knows. This could be the end, but so we plan for both sides.
Yeah. Steven said that's how my grandfather made money during the 1930s. Mine too. My great grandfather from the 1920s rode the market up, sold it, put everything into a trust, and handed it down generation after generation.
I'm just happy that, and I have you to thank for this too, Dave. Obviously, he's been a mentor for years now, as I helped my dad get his money out of the market and just in cash basically for the last year. So
awesome.
He just saved how much money by not riding through this.
Oh, that's fantastic. Oh, I'm so glad to hear that. Yeah.
I couldn't even imagine, he's 15 years retired. What would he do if suddenly all of it, half his money was gone?
Yeah. And I feel really bad for those people who never got that information. And even though he missed out on some of the profits over the last run, it's well worth it to protect what he has.
Exactly.
After this, jeez, it's insane.
And other things I've heard recently, I think there's been a couple people that are already talking about it, which is probably where I heard it. I don't remember his name, so I can't quote him. But with everything shut down right now, how many people, the unemployment's going to go through the roof? I've heard already talks of 20%.
Yeah. Mnuchin said that.
Was that who it was? Okay.
He said unemployment could reach 20%, about the same levels as the Great Depression. And so, it's going to be absolutely insane. In fact, the masterclass for next week on the 25th, we're going to be talking about ways you can make money from home. I've made 6 figures a year doing other things besides trading, and I'm going to teach everybody exactly what I'm doing. A lot of the masterclass is really focused on preserving wealth and making wealth. This is going to be on making money during this, period in which we have a deflationary recession. Generating it, yeah. Generating cash, low cost ways to generate cash. Now, I'm not talking about putting a lot of money into a business or anything like that. I'm talking about ways that you can generate cash flow every single day.
Steven, the login link it's in the same spot as your members area, so it's the same Zoom.
Yep, absolutely. So go right into that members. So you got it underneath the Zoom link for today? It should be, right?
I just mean in yours, in the Wealth Masterclass portal area, it's the same link for the meeting next week. So it's not a new one, Steven. It's the same one that we
yeah. So in Strong Market, in the portal, you'll see the downloads for the Wealth Masterclass. There's a PDF there. It has all of the links in it. including the link for the masterclass next week.
And for anybody that's here that's not part of it, my little secret that's coming this week is, I'll give you the quick blurb, is we're going to let some more people in, and Tradingology members get a special discount. So I'm going to be posting that on the member site later this week. So if you want to get in that Wealth Masterclass and be part of this and go through everything that Dave did originally, definitely jump on that. I think it's a nice 1-2 punch. Protect your wealth, generate wealth, now he's adding to it, and also anything else with the membership. So we're here to help you guys as many ways as possible.
Yeah, and once you get into the Wealth Masterclass, there's no monthly fee, and we're doing Dan and I have been doing once a month updates, but now we've changed every 2 weeks. We may change that again, but all those updates are free.
Yeah, just one-time fees. Get in, you're good to go.
Yep.
Josh also joined us, so Josh is an awesome private client and a Wealth Class member. So
awesome.
And he's the one that did our trades this morning, so the stuff's working. It's not just me and Dave. So I appreciate you again, Josh, sharing those.
Fantastic.
For anybody that didn't see it, catch the recording. You'll see his results in the first 5-10 minutes of the recording. I showed his trades.
We've got a very interesting time over the next couple of years, and everybody's going to think that maybe 15,000 is the bottom. Everybody's going to think that maybe 10,000 is the bottom. We're going to take out the 2008 or 2009 lows, I believe. You have to think about this in terms of events. Systemic events, just like I knew that the recession was going to come in 2020 because of what happened last September. Remember we talked about that?
Oh yeah.
Yield curve inverted. You've been right on top of that, especially with the repo stuff.
Yep.
Looking at all of the overnight repo. Since September, when the repo market went to 10%, that was a shock. That was a significant event that didn't happen until the prior to the 2008 crisis. And so we knew that at that point, this was going to be very, very important. We knew the recession was coming in 2020. We just didn't know how fast it was going to come. And also we had no idea that the virus was going to create it was kind of like pushing us over the cliff.
Yep.
We were already on the edge.
Yeah, it kicked us right off balance. Boom, fell down.
Yep. So, you're welcome, Josh. You're welcome.
Yeah, between the the repo starting up, the yield curve inverting. I pulled that up. Let me look at that. I haven't looked today. What they actually raised it back up, and Sunday dropping interest rates to 0 for the federal funds rate. Everyone's mad because they can't get their mortgage at 0%.
Yeah, when are mortgage rates going to drop? It's like,
I heard from a few mortgage guys. He's like, that's not how it works. Lock in what you can. I heard some people locking in at like 3% is about the best I've heard it got.
Okay. Yeah.
Where was the
crap? If they offer me a refi on my house at 1% or less, I'll take it, because that's basically free money. I'll put it into XRP.
0.04, 0.03, 0.02. Look at these rates on the short term.
Yeah, unbelievable.
That's what 0 looks like. But look at the long term. See, they're jumping.
Yeah, they're jumping. Look at that. It went from it was 90.99 on the 9th to 1.77. See, that's the other part of this, is that interest rates have gone down so much. They're also in a bubble, just like stocks, right? Because bond prices go higher.
Yeah, that's the worst.
That's the low. That's the yield. The inverse of the yield is the yield is very low. But they're not pricing in the risk. When those bonds start pricing in the risk, we could see interest rates going up 3, 4, 5, 6% or higher.
That's the hyperinflation after the 0. It's all playing out.
Yep, exactly. So we may see another dip in interest rates, but I think for the most part, over the longer term, I think we've already gotten close to the bottom. We may even go negative on the short term. Who knows? And I can't imagine for the last 10 years, they lowered, they raised a little bit, then they started lowering rates again. all to try to stimulate, and all the traders loved it because they could go to the primary dealers can go to the Fed and get this cheap money that they could use to buy stocks and put it into the market and do all the buybacks that they've been doing. Then they said, wait a minute, we're going to zero? What's wrong here? It's not good. And so now they wake up to the fact that, hey, if we go too low, it's not good.
Yeah.
They liked the lower rates until they got too low. They said, no. So lots of very, very important things coming up in the markets and the economy. This is going to change the way people work. It's going to change the way people live. It's going to change the way society is just like, I mean, it's going to change. I mean, 2008, 2009 is going to look like a cakewalk.
Well, and the other part too that people haven't realized is, we're dealing with this new strain that's, well, it's technically not new. They've been around for years. It's just a different variation of it. This, summer's coming, that'll help. But I've already heard many things around, it's going to take months to a year and a half to figure out a vaccine. We're going to deal with this next winter too.
Oh yeah, we're kind of lucky. We're going into spring and summer in the States, but Australia is going into their winter.
Yep. They're the only ones that I've seen that haven't closed schools yet. Europe's closing schools. We're closed here. I've already heard, so this week our kids got off for early spring break because next week is spring break here. And they're talking in April, they're going to do online. They're not even going back to school. It's going to be online learning.
Yeah. Yeah. So there's opportunities. I mean, heck, if you're a former teacher, you could start out, you could do some online tutoring. Holy cow. That's a great opportunity, right?
Anybody that doesn't have their home set up, this is
exactly.
Keep yourself sequestered and safe and work from home. That's what I'm sure you might tap on that next week.
By the way, it's just some insider information. It's not really insider information, but it is an insight. I have an acquaintance. He's not really a friend, but he's an acquaintance of mine who I met the other day. He's a vice president for a regional bank, one of the larger regional banks in the area, and they've closed all of the lobby access, and they're only doing drive-throughs.
Yep.
And it's not just because of the virus scare.
Yeah, I heard a branch manager called a friend of a friend that I heard through that. They said, we're going to be open from 9 to 12 and that's it.
Well, they're also closing their access to their lobbies because they're afraid of a rash of bank robberies.
Mm-hmm.
Very, very big concern of a lot of the banks now.
Josh's kids are out for the rest of the year already? Holy cow.
Wow. Stephen, Dan's in Minnesota. I'm in New York State, upstate.
And Josh is in Texas. So Josh's kids are out all the time already, or if they're done?
Wow. Oh, Midland, yeah. Yeah, same here in New York. The governor of New York State said you can't have more than 50 people in one place at any one time. The grocery stores, some of the areas, not in my area yet that I know of, some of the areas have closed the doors to the grocery stores and they're only letting 50 people in at a time.
Wow.
So when somebody leaves, somebody else can come in.
I know they've changed the hours around here where it used to be like 7 to 10. Now it's 8 to 8. So the workers have more time to keep things clean and orderly. And they're also doing the first hours or so are for older people or people that are at risk.
Yeah, I heard that too. Yeah, that's right. Yeah. Josh said his wife is teaching them with guidance from their teachers. Wow. Yeah. So homeschooling is going to be huge.
Yep. So yeah, this might be the advent of online. They've had people been able to take high school and stuff online for years. This is going to make it blow up.
Yeah. Yeah, Stephen, they had there was an alert, I think, on CNBC that every single state has been hit now, not just northern states. Yeah,
I think last I saw there was like maybe 3 states that didn't have a case yet. It was like Idaho, Alaska, and I forget the other one. Other than that, yeah, it's been found everywhere.
Yeah.
And this is just the beginning. It's like doubling every day.
Yeah.
All right. Well, we'll probably wrap shortly here, guys. If you guys got any questions, we're coming up on the top of the hour in about 10 minutes or so.
Yeah. So as we said, likely after maybe today's little bounce, which we've been doing on Fridays, we've been doing a little bit of a bounce, but we're still up and down, right? I mean, geez, we went positive. Now we're down 230. So it's still volatility is very, very high. Be careful out there. We are looking at the possibility of a little bit of a bounce in oil stocks. Oil stocks have gotten crushed.
20.
You mentioned EPM. I like Oxy and MRO.
Yep.
We'll type those symbols in here. EPM, Oxy. The only reason I like Oxy and MRO is I looked at their earnings history and they've been pretty solid. Some of the other oil stocks, sometimes they've lost money, sometimes they've gained money. So they're the ones that are going to get hurt the worst. I think the ones with strong earnings are probably going to have a nice bounce. So those are the ones I'm kind of focused on.
So those are part of the, if you guys are curious, that's like the beaten up stuff we're looking at for the beaten up stock strategy.
Yeah, but these are going to be short beaten up stocks.
Yeah, not long term.
No, not years, not a year or two.
No,
probably,
not at all.
Like a month or two, maybe at the most, maybe weeks or days. But those are the ones we're looking at. Yeah.
Just capitalize on the volatility. You got it.
Yeah. All right, guys. Well, thank you so much for joining us. Appreciate it. We'll have a great weekend. Be safe out there, and we'll see you Tuesday, or how's next week looking?
I have to look. I actually don't know. We'll definitely make sure we're posting in the members area, and I'll shoot out emails so everybody knows when the next one's going to be.
Yeah, we'll play it by ear, and don't forget, for those who are in the wealth master class. I'm thinking of math. The wealth master class, the 25th, next Wednesday at 1 p.m. Eastern time. We're going to be talking about how to set up a online business at home, and how to survive, make money, and keep that cash flow going for your personal economy.
Yep. So last one's, you're welcome, Stephen. Mark, I saw you just joined, so you have to jump on and catch the recording. We're just wrapping up, but any questions, you guys let me know, and have yourself a great weekend and stay safe.
See you then. Have a good one.
Dave.
Bye, guys.